Hi there. Many of you have given a positive feedback for the recent PayPal versus Square stock analysis video that I did. I'm glad it was a useful sharing. So similar to that, in this video, I'll be going through the financials and the technicals for Netflix versus Roku. I'll be using the quarterly earnings reports for this sharing. Netflix revenue has been growing steadily for the last 6 quarters, whereas Roku's is on an uptrend but is seeing more fluctuations. Netflix gross profit was growing steadily but has since tapered or flattened. Roku's gross profit is also flat. Let's look at some of the ratios to have an apple-to-apple comparison between the bigger Netflix and the smaller Roku. Roku's gross margin is way higher than Netflix at around 45% compared to 15% for Netflix. While Netflix has been investing steadily in their product development, they have been investing more in the sales and marketing. Roku, on the other hand, has focused more on product development while steadily increasing the sales and marketing as well. I like to see companies that are continuously investing in their product like these two. After accounting for the operating expenses, both companies are able to return a positive operating income. But after accounting for other operating expenses such as taxes and interest, Roku's profit has turned into a loss, and the losses are getting larger. Netflix still managed to return a net profit from operations. As we have seen earlier, while Roku's gross margin was way higher than Netflix, it was not able to turn that gross margin into a net income. Here we can see more clearly that the net margin is the opposite. Netflix has managed to remain profitable and return a net margin of around 12%, and Netflix net margin has been on a steady rise as well. Roku, on the other hand, is not able to turn that high gross margin into profit, and the trend is clearly on the way down. Netflix earnings per share is also growing in tandem with a rise in the net margin, and Roku is heading south. On the surface, the cash position for both companies looks good, but Netflix is actually having a negative cash flow from operations, and Roku is actually quite flat. The reason for the net cash outflow for Netflix is due to its need to continually invest in new content. So while Netflix is seen as disrupting the entertainment industry, it is only disrupting the mode of delivery of content. It still needs to invest heavily and continuously in content creation. This, I feel, does not warrant Netflix its huge valuation. Other streaming services can easily enter the market and take away Netflix customers. Netflix has also been taking on huge debts the past few quarters. The long-term debt for Netflix has been on the rise and has doubled from 8.3 billion in Q3 of 2018 to 14.2 billion in Q1 of 2020. Roku has only recently taken on debt. The ratio of long-term debt over assets hovers around 2 for Netflix and is about 10 for Roku. The quick ratio for Roku is a healthy 1.6, whereas Netflix is hovering at around 0.6. A quick ratio above 1 is healthy. It indicates the company's ability to pay off its short-term financial needs. Both Netflix and Roku's total liabilities are growing with a growth in total assets. Roku's assets are growing faster than its liabilities, which is good. The book value for Netflix has been growing steadily. Roku's was also growing but has since flattened. The price to book value is the ratio of the current share price to its book value per share. The lower the value, the better it is. Both Netflix and Roku are way overpriced at current levels. Now here's a side-by-side comparison of the financials for both Netflix and Roku. Now both are very weak companies based on the financials. While the gross margins are okay, the profit margin is actually very poor. And both are overpriced at current levels, as you can see from the price to book values over here. Let's look at the technical analysis for Netflix. I posted this chart in April and said at the time that I see further upside with a target of 550. Here's the updated chart. Netflix consolidated sideways for a while and is now trading at around 507 level. Now the recent move up is with a low volume and is not a good sign. And here's the daily chart with a closer look of the recent move. The price bounced off the support at around 430 and headed higher to make new highs. I don't see any signs of reversal yet, but the low volume is not encouraging. And the risk reward is not in the bull's favor either. Roku, on the other hand, has just broken a trend line with a high volume. Technically, Roku seems to be much more stronger. I also see an inverted head and shoulders here. This is one of my favorite patterns because it's reliable and it also gives an accurate target price. Usually, once the price breaks above the neckline, it will travel by the depth of the valley over here. So with this, we can extrapolate and say that there's a target of around 210 for Roku if this entire move holds. But there are two overhead resistance levels where a pullback can be expected at around 150, the current level, as well as 180 level. Next, I intend to do either a video comparing Fiverr versus Upwork or Livongo versus Help Catalyst. Do vote for the video you would like me to do by clicking on the like buttons in the comments below. And do subscribe to my channel if this sharing has been useful. And hit that notification bell so that you don't miss out on any of my future videos. And I'll see you soon in the next one.